So in the last video in the series, we looked at CRT hierarchy for swing trading. So checking monthly and then confirming with our 2 weekly, weekly, and price execution timeframes to get into high probability trades at the perfect time. But what happens when you have all of those things mapped and price does something else? Well, just like the weekly, the 2 weekly defer to the monthly defers to higher timeframes. So it's not that we want to sit there studying higher timeframes like the 3 month, 6 month, 12 month, but we definitely want to be conscious of them and make sure that we are factoring in those timeframes in our swing trading. So let's look at a tiny bit of theory to look at why monthly manipulation fails, and then look at a live or an example that we've been studying on AUD CAD that is going to bring this to life in a real way. So why does monthly AMD fail? Monthly AMD fails when higher time frame distribution is in process. So what does that mean? For example, think about the 3-month time frame. Imagine that has accumulated, there's been a manipulation and it's distributing to the accumulation candles high. And then within that distribution phase, you get an opposing monthly CRT or a monthly manipulation. You're expecting price to distribute lower because you're just looking at the monthly time frame. What you don't see is that price can still gravitate higher. The second reason is that monthly manipulation, the high, becomes a higher time frame manipulation target. So what does that mean? You see monthly manipulation, so you're looking for a next candle to distribute lower, for example. But the monthly candle closes at the same time as, for example, a 3-month candle or a 6-month candle, which then exposes the high of an accumulation candle. So think about it. On the 3-month time frame, price has accumulated. At that exact point, monthly price has manipulated. There's still a reason potentially for price to want to hunt that high, because while it's a monthly manipulation, it's a 3-month accumulation. So lots of words, but just study that. Take your time to go through that and understand it. We are going to bring it to life on the charts. So this is what it looks like as a visual. You have a higher time frame range. Imagine this is 3 months or 6 months. So what you see here is that price on the monthly has manipulated. So we have an accumulation candle. Price trades above but closes inside the range. So you're expecting now distribution to the low of the monthly candle. But then price trades higher. So here we have a conflicting AMD because this candle gets swept and closed inside. So we have new context to go higher. But price is not always that kind. Sometimes this low will not sweep the previous candle's low. It will just close and price will gravitate higher. So you have no manipulation to trade. But what you do have is information on your higher time frame range. So for the purpose of swing trading, always think monthly, 2 weekly, weekly. You're still going to hit so many setups with this thinking. But just keep an eye on 3 month, 6 month, 12 month, just to sense check that your trade does make sense. So that's what we're going to look for. 3 to 12 month opposing context. Is there opposing AMD in process? Or higher time frame candle closures that create targets against our trade idea. And there's only a few times in the year this can happen because 3-month candles only close, 4 times in a year. So this is not going to be a regular thing in your trading, but if you're swing trading, you want to be aware of it. So let's forget the 2-week time frame. So if you're just joining us now, we've been looking at 12-hour price execution in conjunction with weekly, 2 weekly, and monthly trade ideas. So I'm going to take the 2-week away and bring up the 1-month time frame. So we have this sweep that we've discussed in detail. Price breaks above previous monthly candle range here. So we're expecting distribution. Once we get the close of this candle, the distribution low on the monthly is here. What then happens is that price trades into the first candle, the original manipulation candle, and then shift structure, closing right here. So this becomes our sweep. So now, where does price want to target? First target is here, which we've discussed. So this accumulation, manipulation, distribution plays out. But then, something we haven't discussed, and you've probably been waiting for me to reference this, is, well, what happens next? So this is the high of the previous candle from a monthly perspective. We trade into it and then we close below. So what targets are being exposed? This target here. So we're expecting price to distribute lower. If we bring up our 2-week time frame, what do we get? Okay, so we have an accumulation candle right here. We have manipulation because this candle closed inside of the previous candle's range. So we're expecting distribution to the low. And this is a brilliant entry that makes perfect sense because you have bullish price action, try to trade higher, close inside 2-week candle range, push into this bearish structure, sell off. But why don't we hit this target? And the answer is that the higher time frame is against this trade. So it's unlucky, it can still play out, but the reason that it doesn't is this. So if we now zoom out and we just change our time frame, take away the 2-week, and we look at the 3-month time frame, what is happening? So first and foremost, we have manipulation of this candle. In this 3 months of price action, we accumulate. We then go lower and then close inside this accumulation candle's range. So price then targets the high of the accumulation candle. So we have AMD. Notice this. So what does price do? It closes above its previous candle. So this now is potentially an accumulation candle. It's certainly not a manipulation candle. What we then see is that price trades in to the previous high and it closes inside the candle's range. So logically, we're expecting now price to potentially want to distribute to this higher time frame target. However, we want to check all of our time frames. And what do we see? The 6-month is actually the true picture of what's going on here. You've got accumulation candle, runs into the low, closes inside the 6 months candle's range. We now have distribution. And if you look at where this candle closed, it closed right here at this exact point, and it ran the previous candle's high. So it did not manipulate this candle, which means that this is not a target in the market that we're interested in, because the 3-month also defers to the 6-month, and the 3-month and 6-month candles closed at the same time. So we have a bullish candle that ran its previous candle, we have a manipulation of a low, and we have a higher time frame target that remains in place. And that is where price goes. So now let's go back to our monthly time frame and pick up price action right here. So we have our manipulation, but actually price wants to go higher. So then we come back to exactly what we were talking about in our weekly candle lesson. What do we see here? Let's take the monthly away. We can see at this exact point that price probably wants to go higher with 6-month distribution. We have a last sell to buy on the weekly time frame. This is a weekly order block right here. So sell, buy. Price stings in to the weekly order block. Where's the target? So even if you just wanted to take a weekly swing position and you were that patient, this is a perfectly logical 2.87R swing position. But we can do a lot better than that. We can enter in here once we get a structure shift. So we see structure shifting right here. And like I said before, we can look to get involved, covering the low, same target, 4.41R. So this is how you truly knit timeframes together. Yes, monthly is our guiding light. It's what we are relying on for our directional bias 95% of the time. But I'm always keeping an eye on 3-month, 6-month, 12-month candles, because they are the time frame that the monthly, or the time frames that the monthly defers to. And once you get a 12-month distribution candle in play, that can almost set you up for a year's worth of swing trading. So let's do one more video to wrap up this series, looking at how you would structure your first CRT trade, CRT swing trade. Then we're going to get on to series 2, which is where we start touching on order flow, which is the next crucial piece to successful swing trading. See you there.